Cars are expensive, and prices can be out of reach for many shoppers. Even with long-term auto loans, it can be rough to afford a new car. Fortunately, car leasing allows customers to get behind the wheel of a newer vehicle with a monthly payment that's usually lower than it would be if you purchased the car. But leasing a new vehicle every 2 or 3 years would be more expensive than buying one and keeping it for a long period of time, especially after the final payment. Other consumers are quite content to lease a vehicle they could never afford to buy, even if it doesn't necessarily save them money. But there are several distinct advantages and disadvantages to leasing versus buying. It's important you stay to the end because there's a lot of great tips that will save you money and give you car smarts. But first, I want to remind you to subscribe and click that little bell for notifications so you don't miss anything. We give you more than car reviews and first looks of new vehicles. We give you car smarts, like I was saying, because knowledge is power. Let's start with the pros of leasing. Leasing remains a popular option because it allows you to drive a nicer, newer car that might otherwise be outside your price range. The latest and greatest for less. Leases let you drive nicer vehicles that you might otherwise not be able to afford in that price range. One additional pro is the warranty coverage. You can also lease new vehicles, which tend to have factory warranties that are at least 3 years or 36,000 miles. That means you're off the hook for defects and part failures, but you're still liable for damage, obviously, or misuse before the lease is over, which means it's not on you, it's on the next owner. Some dealers also offer complimentary maintenance in their lease agreements, oil changes, tire rotations, and etc., which would save you some money. An additional pro is at the end of the lease, you walk away. Once your lease is up, you can bring it back to the dealer, pay any outstanding fees, any wear and tear fees, and you walk away. But you get a new car every few years. And leasing lets you trade up for a new model every few years without significant changes to your monthly payment. There are some cons to leasing. Although many drivers choose to lease their cars, leasing isn't for everyone. The option comes with mileage and customization restrictions, and it doesn't help you build your equity. The mileage limits are basically 10 to 15,000 miles. So the average person drives around 12,000 miles. The average price for overage charges are around 25 cents a mile, and it can go much higher. So leasing may not be the move. If a lengthy commute or you make a lot of frequent road trips, that wouldn't work. And there's no equity. Although leasing is generally cheaper than financing, it doesn't build any equity at all. So you can never sell your car or cash out of it. And of course, if you want to customize your vehicle, you cannot do that because leases are glorified rental programs. Your options for customizing your car, like tinting or performance upgrades, etc., are extremely limited, and you'll need to approve that from the leaser for any modifications, and they're not going to let you do it. Even if you're approved, you're typically going to need to remove all that and put it back to factory parts before you return it because they plan to resell it at the end of the lease. And then the wear and tear charges. Dealers generally won't charge you for normal wear and tear, like small scuffs and things like that, but you are responsible to fix dings, dents, scratches, missing parts, poor quality repairs, lack of maintenance, and in some cases, excessive wear and tear charges can cost thousands of dollars. And there is an early termination fee, if they'll take it back. And if you decide you no longer want that vehicle, maybe it doesn't fit your need anymore, you may be able to cancel your lease, but not without paying at least $2,000 or more in early termination fees. There are some pros to buying a car. All things considered, buying is the move if you plan to own your car for a long time. Maybe you don't drive a lot of miles, you plan to do some modifications, or you plan to drive it more than 15,000 miles each year. You may also like the feeling of wrapping your hands around the steering wheel of something that is entirely yours. There is a sense of ownership. Financing a vehicle and working toward 100% equity can offer you a sense of pride and progress. And building equity, unlike leasing, each month you're making payments toward a vehicle that you own and you're building ownership in that vehicle. Of course, you have to maintain it. You can sell the car at any time, pay off your loan, and in some cases, even profit, which I have done a few times if you buy the right vehicles. There are no mileage limits if you buy the car, so nobody cares how far you drive it each year. Just keep in mind that both the factory and the extended warranties expire after a certain mileage number and it's important that you do the maintenance. Small scratches and dings aren't a problem. While leasing a vehicle, you need to keep that in good resale condition. A vehicle that you own or finance can be scratched and dinged up without immediate consequences. This is why dog owners may want to rethink if you're buying a vehicle, then you can clean it up when you have the time or the money. Buying a car is cheaper over the long term. You'll pay off the auto loan eventually, meaning you will take 100% ownership and only have to pay for insurance and maintenance. Plus, once you fully own your car, you'll have the option to downgrade your insurance from full coverage, which is required by most lease and finance agreements, to liability only and maybe remove collision, depending upon your driving and where you live and a lot of other factors, which can save you around $1,000 a year in premiums. There are some cons to buying a car. Owning a car is great, but it's not cheap, especially if it's new. And if you want the newest car available or you want to upgrade, buying may not make sense. There is depreciation, and new vehicles tend to depreciate between 15 and 40% within months, meaning you risk being underwater in your auto loan for the first few years. Now, there is gap insurance, which can help you in the event your vehicle is totaled. If you need to sell the vehicle, you may find yourself still owing money on the vehicle that you don't own, and the bank owns part of that. Purchasing or financing a used vehicle can lower your monthly payment and save you from a year of depreciation, but used cars may not have the cutting-edge features, gadgets, and safety features that you want. Now, there is warranty coverage issues. If you buy a used car that's at least 5 years old, it is likely out of factory warranty, meaning you will be on the hook for any unexpected repairs. And that's why we strongly recommend financing a historically reliable vehicle or insuring an unreliable vehicle with an extended warranty if you really want something that's unreliable. There's no easy answer to the question of whether it's better to buy or to lease. Each method has its own pros and cons. If you drive between 10,000 and 15,000 miles a year, then it makes sense to look at a lease. If you drive less than 10,000 miles or over 15,000 miles a year, then buying it would make the most sense. Now, while you can typically get lower payments with a lease, you never really own the vehicle. And there's no one-size-fits-all answer to question whether you should buy or lease your next vehicle. Which option you choose depends on your current financial picture, automotive needs, and future plans. If you like this video, give it a like and subscribe for more videos like this one. If you have any questions or comments, I'll be happy to answer. You can support me by buying me a cup of coffee. The link for that is down in the description, plus all the links for our website, our social media, the book, and the podcast. I'm Lauren Fix. Thank you so much for watching.